Hey traders, this is Dr. Greg McLeod from the Elite Traders University and My Market Heat Map. And it's time for another edition of Bulls versus Bears, the weekly Forex forecast. Before we get started, I want to direct your attention to our screen right here. And we have a risk disclaimer on our screen. Make sure that you understand all the risks associated with foreign exchange trading. And with that said, let's go ahead and get right to it. And it's so good to be with you here. Let's go ahead and get to it. Bulls versus Bears, the weekly Forex forecast. And we're going to this is actually the week of the last day of the month is January 30th, 2023. And we're going to go right into what's going on in the markets right now, okay? Or is it bearish or is it bullish, right? So let's go ahead and get right to it. We'll close that up, and we'll close this up as well. And we'll go ahead and get on into our trading, okay? Seems like the risk disclaimer is okay. There we go. Now we're gonna start with My Market Heat Map. Is my number one trading tool in the market for finding out what's going on in the market, what's hopping, what's popping, and what's dropping and what's not. Currently is 50% off, and it's a great tool for seeing the market. It's a whole suite of tools, heat maps, trader tools, tutorials, videos, courses, all kinds of things to help you become a successful trader. Okay, so let's get right to it. I'm going to let's take a look at the heat map. It's arrangements of currency pairs by percentage change. It tells you what's hopping, what's popping, what's dropping, and what's not in the market. We can see all the yen pairs are at the bottom, and they are all been trending down. Euro yen down 0.32%, Kiwi yen down 0.34%, pound yen down 0.36%, Aussie dollar down 0.39%. And basically what we do with this is to look what's going on in the market, and then we start trading it. And but before we do that, let's go ahead and take a look at the economic calendar. Like checking the economic calendar, I'm going to start with this week ahead. We want to see what's driving the market right now, and we can see the news that's coming up. And I usually look at the high impact items first, set that for high, and then we can see that there's no high impact items for Monday, but Tuesday we have Canadian data. We have gross domestic product month on month. Previous number 0.1%, and so the Canadian dollar will be in play. So it'll be interesting to see what goes on there. Okay, and then later on that evening we're going to have the New Zealand employment change. That's going to be a high impact item as well. New Zealand dollar will be in the spotlight roughly about 4:45 p.m. Do you really want to trade that? You don't want to trade between 4 and 6. It's the spreads widen out, and it can become very hazardous to trade. So you really want to look at trading the Forex market. Even though they say it's 24 hours a day, 5.5 days a week, certain times of the day are more liquid than others. And what you want to do is to trade when there's a lot of liquidity, or you can get stuck, right? You ever been in a canoe or a kayak when the water level is not too high, especially when we have a drought or something? And I remember getting in a canoe with a buddy of mine, and we were both big guys. So when we sat in the kayak started scraping the bottom of the river because there wasn't that much water there, right? Why? Because there wasn't a lot of liquidity, not a lot of liquid, right? And so we were getting stuck, and we had to get up out of the boat to push it out, to push it off this little the sandbars or whatever now that were underneath. So similarly, you can get stuck in a trade if there's not a lot of liquidity. The spreads widen out. All of a sudden now it's costing you more to get out of your trade. So we want to trade during the most liquid times in the market, and those are going to be during the big market opens like Tokyo and Australia, London, the European market, and the New York market are going to be your most liquid markets, which are going to provide you the most opportunity. Okay. So even though news is coming out there, we probably don't want to trade it, but there might be some after effects. So if you wait a couple hours, you might still be able to find some trades on the New Zealand dollar and New Zealand pairs. Like Wednesday, we have a little bit more data. We have UK data at 4:30 a.m. Eastern Time with manufacturing PMI that comes out, and at 10 o'clock, we have the U.S. ISM manufacturing PMI as well. And then around 2 p.m., we're going to have the Fed rate decision. So it's going to be a very big week with the Fed rate decision the 1st of February, okay? And it's widely expected for them to raise interest rates another quarter basis point to 4.75%. Currently, it's 4.45%. And they'll see if the Fed continues their rate tightening cycle, and also to see whether or not they give some type of language about future interest rates, whether this is going to be one and done for a while, or maybe based on the data that we've seen, inflation has actually come down a bit. We're seeing cheaper gas, some cheaper food, and some cheaper energy in general. And because maybe those interest rates have really taken an effect. And the reason why we're looking at this, because interest rates are the major driver of currency movement. When interest rates are hiked, it usually causes the currency to go higher. So an interest rate hike could send the US dollar higher. But we're going to check the technicals and see if that is the case, okay? So big news. So you might find the market's kind of flat, kind of boring, kind of like nothing really going on, because this is a really big announcement. The US dollar is the reserve currency of the world, so all eyes are going to be on it, and a lot of traders probably don't want to be in it ahead of time. Especially this is the week of non-farm payroll on Friday as well, February 3rd. And so we have two big risk announcements coming out that which could dramatically send the market in one direction. And this is like a giant hurricane, like a big storm that's coming, right? And when there's a big storm or a big hurricane, you usually go into a storm shelter or move to higher ground, or you do something to protect yourself. So what we find during these types of big announcements coming out, we'll see the dollar actually rally, because the dollar is regarded as a safe haven asset. People sell off their things, and what they do, they hoard money, they hoard cash. In the old cartoons, it would have like people stuffing mattresses with money. You even heard the term mattress money. Or they'll dig jars and put it in their backyard, because they would rather hold cash than something risky that could go down in value very quickly, like a stock. So you might find the stock market kind of act kind of wonky leading up to this announcement. You might also find you might find crypto selling off as well, because there's so much uncertainty. And also by seeing all those yen pairs, if we go back to our heat map, if we look at all currency pairs, we see all the yen pairs at the bottom. We have Kiwi yen, Swiss yen, pound yen, CAD yen, Aussie yen, all at the bottom. This is a risk-off move. People are running for safety. They're unwinding their yen long position, their short positions on the yen, where they're borrowing cheap yen and buying risky assets. But now with everything seems kind of on edge, people go the other way. They close out those positions. They buy yen, and they hide in the yen, and they also hide in the U.S. dollar. We find at the very top of the heat map, we see dollar South African rand, dollar CAD, dollar Swiss, dollar Israeli shekel, dollar Norwegian kroner, even dollar Southeastern Kentucky, all near the top. It's not Southeastern Kentucky, it's Swedish kroner. Just joking. Little currency joke there. Stuff like this is always good to have a sense of humor, right? And if you don't have a sense of humor, then maybe you need to find another show to watch. Okay. All right. Moving right along. Thursday, we have February 2nd. It is Super Thursday. We're going to have the Bank of England. UK is going to be in the spotlight. Not to be outdone by the FOMC. The Bank of England interest rate decision comes out at 7 a.m. Eastern time. They're going to also talk about their asset purchase facility, which is their QE that they use to purchase assets and to stimulate the economy. Also, it was widely expected for them to raise rates from 3.5% to possibly 3.75%. But sometimes the Bank of England is kind of tricky. Sometimes they will raise a full basis point, or they'll do something like a 1.5 to surprise the market. So we might see that is the case, that they may raise their rates larger than what's expected in order to provide that shock and awe effect to break the back of high prices. Inflation has been very high in the UK, and so the Exchequer says that they can actually get prices down by the end of the year using some austerity measures, which is kind of code word that we're going to jack up interest rates really super high. So it's the painful medicine that central banks around the world give their people in order to reduce high prices. And the bitter medicine is inflation, short-term inflation created by higher borrowing costs and higher cost of money, which actually, it's like someone who has a fever and then putting a blanket on them, hoping they can break the fever by making it extra hot. So that's kind of like the scenario there. Okay. So again, Thursday, February 2nd, there's going to be a big party in the pound pairs, pound yen, pound Aussie, pound Swiss, pound CAD. So look, you'll see, probably the pound pairs at the top of the heat map during this FOMC meeting. Friday, we have non-farm payroll, which is the biggest economic announcement in the U.S. It basically counts how many jobs are created. The more U.S. jobs are created means more U.S. people have money to buy stuff from other countries. That's why other countries are looking at our employment numbers. Like, how can we look at Australia payrolls? And how can we look at England's payrolls? Why is the U.S. payroll non-farm payroll? And who works in a farm? Well, there's a lot of farmers out there. And a big thank you, farmers, for providing food on our tables and keeping our supermarkets stocked. So my hat's off to farmers. However, NFP means non-farm, which farm jobs are not included. But the reason why we look at U.S. payrolls more so than any other country is because we are the first largest economy in the world, and we buy a lot of the things that other countries make. And so if the American worker is not making money or not working, then they can't buy the stuff that these other countries make. So that's why all eyes are on this number, and why the U.S. jobs number is probably the most important economic number moving forward. Because if no one has a job, then they can't eat and they can't vote, and so politicians care about that. Okay, so that's what's going on. So when I'm trading the news, or trading ahead of the news or after the news for the U.S., you could use dollar Swiss. That's been acting pretty nicely. But I'll actually go to the euro, because the euro is considered the anti-dollar. And so when you have the anti-dollar, you just go the opposite direction. But usually it's this way. If it's really good news, it's usually bad for the U.S. dollar. And if it's really bad news, it's usually good for, the bad news is good for the U.S. dollar, and good news is usually good for other currencies, not the U.S. dollar. And the reason why that is so is because the dollar is regarded as a safe haven during times of uncertainty. But the moment things are good, then you don't need a dollar anymore. Why? You use your dollars to buy real estate or gold or crypto or other assets that pay more interest than a U.S. Treasury certificate or bond at 3%, right? You can buy another asset. Now, it'd be very interesting because February is usually a really, really bad time in the stock market. There is a 72-year cycle, which shows that traditionally the S&P and NASDAQ and other, NASDAQ wasn't around 72 years ago, but the indices, stock indices, usually do horrible. February is usually the worst, other than August. February and August are like the worst months for the stock market. And usually months that are really bad for the stock market are really good for the yen and the US dollar. Okay. So, but we'll see that. Those are just seasonalities. And I'm going to be teaching about seasonalities and currency correlations and how to trade commodities and things, but by using currencies that actually move in the same direction as certain indices. So you don't necessarily have to jump into these things. And I'm going to be covering those at my Las Vegas workshop. It's going to be fabulous Las Vegas is Las Vegas Pip and Run Forex Mansion Mastermind, and join me April 3rd through the 5th for this live event. It's going to be incredible. It's going to be fantastic. It's going to be huge. And I'm going to be sharing my Pip and Run strategy with those in attendance. We're also going to be doing live trading, a couple hours of day of live trading, plus workshops on entries and exits, and also how to risk management, which is also a fun topic, but also currency correlations, currencies that actually mimic the U.S. stock market. Okay, we're also going to talk about a clever hack where U.S. people will be able to use CTrader a lot easier than just opening an offshore corporation. I'll be sharing that exclusively with people who are either attending the in-person Las Vegas Pip and Run Forex Mastermind, or they actually have a streaming ticket. So, but it's going to be we have a beautiful location here where people will we're going to sit around. I'm going to be teaching. It's going to be we have a pool. We have a pool table. We're going to have catered food, catered lunch, dinner. We're going to have some top golf. It's going to be a great time where you're going to be with me if you're interested to learn from the best, to improve your skills and transform your mindset. This is the ideal place to be. And, there's going to be a discount for those of you who are already mentorship. It's going to be fantastic. So don't miss it. There's only going to be 35 or seats available, and they're almost sold out. So I look forward to seeing each and every one of you who can. If you can't make it to the live event because we're sold out, though, don't worry. There'll be streaming tickets available that you can do it from your home. But you know what? After being in COVID and zoomed out for 3 years, you probably want to come out to this event. Don't want to miss it. It's going to be fantastic. I look forward to seeing you there. And so that's it. So you can go to the Elite Traders live.com Vegas event, and you can find out more about it there. Okay, or you can email Michelle at elitetradersu.com, or email Greg at elitetradersu.com. Okay, all right, so let's get right to the charts. Right, we're going to look at let's start with the US dollar index. Always want to start with that. Let's get rid of that. I just wanted to type this. The DXY is this is the U.S. dollar index. It's a basket of currencies versus the U.S. dollar, and we can see that we had a tremendous uptrend, and then we broke our long-running uptrend, and now we've been consolidating down. We've been going down from just lower highs and lower lows. But we're finding a lot of support here with this old May 31st, 2022 low. We're finding the same type of consolidation here. And so what we're looking at is, some type of a bounce from this area that we're finding here, especially with the FOMC meeting happening. We're finding this 101.88 to about 101.49 as very low, very small range. And usually we have narrow ranging candles. We usually get some type of resolution or breakout from that consolidation. We look for that breakout to maybe take us back up into the 103 area. But we do have a long running downtrend, so we may rally up there and then pop and drop, right? Pop and drop, which would mean all your risk on currencies like the Aussie dollar and the euro versus US dollar, Aussie versus US dollar, pound versus US dollar may in fact drop, because remember DXY is same as USD. So when we trade currencies, we're trading one currency, the strength of one currency versus another, the relative strength. So when we trade AUD/USD, we're really trading AUD/DXY, which would mean that if AUD is getting stronger, then DXY is getting weaker. But if we're seeing the dollar strengthening, then we would see those other currencies actually get weaker, and those currency pairs dropping as well. So let's take a look at the euro dollar, which is the anti-dollar, EUR/USD. And like I said, it's my choice to trade the euro dollar when there's US news, because of its strong negative correlation. Negative correlation means when one currency goes up and another one goes down, right? Right. Positive correlation is when they both move at the same time, or at the same direction. So we can see that on this daily chart, the euro has been moving up with higher highs and higher lows. And, it's a very good uptrend, but usually when we get too far away from the support, price may come down to retest, right? And so we are at the, we're forming some type of maybe a upward rising trend channel. And I'm going to clone this like a sheep, and then go over here, and then we have maybe that's not really close to this. And then you can draw a median line through that, I guess, right? Now you got like Andrew's pitchfork, right, where you have some type of a lower channel within a channel where price rallied here, dropped, rallied up, and so now we look at price maybe coming back down a little bit. So bulls versus bears. I'm bearish on the euro. Okay. So let's move along from the euro. Let's go to the pound versus US dollar, GBP USD. Take a look at that, and you can see that I'm going to remove something. Remove, right? And we never got to that line. In fact, this was like the top, and we actually came on down, right? We broke the trend line. We retraced the trend line, but we've got something going on here. And there was a kind of a thing where, we had the dollar CAD, and the dollar, even though CAD raised their interest rates, the Canadian dollar actually dropped, which was fairly interesting to have that happen. And we're looking at something like this here, where we have this double top in the pound versus US dollar, and even though there's a Bank of England rate announcement coming up, that we could see, instead of a rise, we could see a drop from here, right? So it's counterintuitive because, like I said before, interest rates are the biggest driver of currency, and when a currency when a bank starts hiking, the currency starts to rise. Well, there's also a make effect where people who knew about this, they were already taking this up, right? So now when they actually make the announcement, hey, we're raising rates, we're raising right now, well, then it's over, right? And then, so now people start taking profits because they've been long all this time. But to the average person, they'll say, oh, they're raising rates, and they'll start buying. And they'll buy right here against this big resistance zone because they hiked rates. Because they hear pundits and things, well, the Bank of England was raising rates, so the pound is going to go up. Saying, look at the technicals. We are hitting a total, like, a barrier. We have a barrier. Let's see if I can put a horizontal line. We have a barrier, the 124.52 barrier, which goes back to this congestion zone here. And we are. If you can take any one of these swings. It's you kind of, and you can go from top to bottom. And the 618 is like right here. The 618 is a very strong Fibonacci resistance area, and you can see that we had a congestion zone where this thing can start dancing around this point even before this line was even formed. And so we have this double top going on here, and we can see the pound actually drop, and it's consolidating too. Indecision. These small doji spinning tops represent indecision candles, right? And we have no decisions, like decision made at the cross. Well, either go below the cross, they're going down, it's going above the cross, and it's going to heaven, right? So we're looking at this, now we get a breakout, a closed candle breakout above here, then we could continue to run. But and we are in a huge supply. This thing formed a giant supply zone, which is going to be very difficult for it to actually make its way out. Now, I don't draw them very often, but when they're that thick, we've been swimming around in this thing, and it hasn't been able to make any headway out of it, either to the north side or the south side. And we can even draw a trend line within that. And in fact, I talk about supply and demand zones and trend line. In fact, there's an early bird bonus. You'll get my special training on supply and demand zones and advanced trend line trading. You'll get that. It's a $1,476 value, and you're going to get that when during early bird special for the first week of February, if you are able to book your seat for the Las Vegas Mastermind. So make sure you get your free gift that comes with this with this powerful meeting. Okay, so we're looking for maybe a break of 2340 for a move back down to the this is like your M pattern, and you're looking for maybe a drop down to 119.14. Huge drop. Bulls versus Bears. I am bearish. The pound. Okay. Moving right along. Let's go ahead and keep it moving. We have New Zealand dollar news coming out. So we're going to go ahead and pull up that chart, and we can see that it's similar pattern. We have a topping pattern at this 65.25 area, and we can see this 0.6525 area acting as resistance. It was resistance area back from June 3rd, 2022, and it has the makings of inverted head and shoulders pattern. And if we got above it, well then yeah, we could probably see a north shot move. But it doesn't, with the seasonality, usually the Kiwi dollar moves with the U.S. stock market. Stock market may tank as well, so but we're looking at this actually on bulls versus bears with a double top coming, showing, and the FOMC coming. I would be bearish the Kiwi dollar, and so I would get my bear up. Get my bear up. Okay. Now we got some news out of Canada as well. USD CAD. And we can see that we had our bearish head and shoulders and our drop, and a lot of janky stuff. I'm gonna go ahead and just remove all my drawings here. Right click, remove drawings, and let's start from a clean chart. Now we actually have a little bit of support coming in here, right in this area here, the 3241 area. Didn't quite get there, and that should be bullish, because if they're turning price before they get to a low, that's usually pretty bullish. We have like a morning star, a 3-candle pattern known as a morning star, bearish candle with a small body indecision candle, and now we have a bullish candle breaking the top side there. This looks bullish. We're bullish as long as price stays above 32.97, right? Yeah, morning star, and this could go up considerably because of the amount of support that we had back here. Rising trend line. We do have a downward sloping trend line, so we might have some resistance coming into the around the 33.92 area. But this is a bullish pattern, with lots of support that it couldn't get through. They're defending the 200. We're above the 200 moving average, which is bullish. And so bulls versus bears, I would see that this would is bullish. Okay, so I'm going to put my bull right there. Bulls versus bears. We're bullish. The dollar CAD. Okay. Let me go back to my economic calendar to see what other flags we're looking at. And we looked at the euro, the Kiwi, and the British pound. Yes, of course. We may not. I don't think we've looked at that yet. But let's look at GBP USD. Right. Oh yes, we did. We did look at that. Right. Well, let's look at the S&P 500, SPX 500. Oh, we're not trading right now. No, thank you. SPX 500. All right, take a look. And this does not look very happy either, right? Similarly to the other currency, risk-on currency pairs, we're running into resistance. Look, this was a full-body green candle, smack down, baby. And then we rally back to the same area and then smack down. Not as hard as smack down, but still a reversal. We have an evening star reversal pattern. Well, shades of gray evening star. But still, the momentum was bullish, and then it turned, with like an outside day kind of pattern. But we have just been ranging, range, right? The Lone Ranger, high old silver. So we're ranging in this area. We get a low, and then we rally up in this range. Not really trending. We're at the top of the range, and so we could see a move south, right? The markets don't like indecision. It's like I said, typically in February's, it's never been. I know it's January 30th now, but it'll be February in just a couple of days. And February's have normally been not good, okay? And they say, okay, Greg, sure, prove it to me. Yeah, don't believe me. I've only been doing this for 30 years. But let's go over here. And let's go to February again. This is February. February 2022. What happened? We went down, okay? Oh, well, that's just 1 year, Greg. Yeah. Okay, let's go back to 2021. It might be weird because it was COVID, But let's take a look. It's very easy to do. Go back to February, and February just had. Okay, so this February, see, made us into a liar here. This one actually went up. We had a positive February. Remember, but it was like a positive up and then negative down, and into March. So I said it was mostly positive. Okay, so that one didn't work, right? Let's go back to 2020 February, right? Well, this is when everything starts like getting. Okay, this February, COVID. This is actually February rallied. Okay, so we had 2 up years. Okay, but this is like you admit there was an anomaly. Like I mean collapse. I mean, right, February 12. Okay, so actually take that back. This is February still, and then February we all the way through into March, right? But then again, that was an anomaly. It rose for part of February, almost like setting people up for the drop. Let's go back to February 2019. And we go back and back and back and back. And that was 2019, right? The 7 October and October. Oh, we just lost something here, right? October to April. We lost a whole month here. What happened here? Look, we go from May. Yeah, they're missing data. Let's just do another S&P 500. They're missing some data. Okay, 2019. Sorry about that. I've never seen that before. Where like whole 3 months are missing. 2019. Oh wow! Look at this. This is missing everything. There's just nothing there, right? Is this SPY? Okay, ETF, SPX 500 daily. Seems like I don't know why they toast their data. Okay, here we go. This is 2019, and here we go. And February 2019, we actually went up, and yeah, we went up in 2019. Okay. All right. How about 2018? 2018. Here we go. And we had the end. We actually rose here too, right? I mean, this is not to go for the whole home team. 2017. And here is our 2017. We actually had a rise, right? So it's very interesting about on this. And we have a dinosaur here where you just don't have any more data, right? So interesting. We had some good years, some bad years, but if you go back even farther, there's probably more negative years for February. But we are in a resistance area. If we break, then it'll be bullish. But bulls versus bears, I am bearish. Bearish the S&P. All right. Okay, let's look at Bitcoin. BTC USD. And okay, we have our break. Remove all drawings. Look at this. Look at this move. This non-stop. Bitcoin on fire. 23,000. Right? Daily chart. Let's go out to, I want to go out to a weekly. And you can see that we have a nice rally into the 200 simple moving average and old resistance. So this may be it for the Bitcoin rally. 25,208, 25,208 is the old high right here, and we may have a little bit more to go, and we probably see a bounce from here. As the dollar strengthens, remember it's BTC/USD. If the dollar starts getting stronger, BTC is getting weaker, right? This is what this whole slide's about. It's about dollar strength, right? Dollar strength. The whole premise of Bitcoin is the dollar is collapsing and this new digital currency is going to replace everything, right? Well, the dollar's not dead yet, and that's why we have this precipitous drop, right? And there's a talk of the Fed easing interest rates, but if they raise interest rates and the dollar gets stronger, then we'll see a pullback. It may not be a deep pullback. It may be just a seasonal pullback, maybe just to some old support back here. And then from there, we get some type of an explosion. Now, you got to figure these guys who got long here, congratulations for those guys who got long when this thing was down in the 16,000s, 15,000s. And they're up like, $10,000. Do you think they're going to like let it stay there? Usually there's some profit taking. So this might be a profit taking decline, not a weakness decline, but maybe just some type of profit taking, forming some type of inverted head and shoulders. This forming one shoulder here, a head, another shoulder, and then we may take off later on in the year, right? So, but still, short term, bulls versus bears. I'm bearish, right? I am a bear. Short term bear, longer term bullish. Okay, let's take a look at gold. A lot of my students have been trading gold. Big salute to Joseph Jessup and Everett. They trade the gold, and gold can go fast. We see gold, actually, if you look at this chart, if you compare it to Bitcoin, it's the same kind of double top and a drop in this sharp rise. So Bitcoin and gold almost form like a similar chart. And look, we dropped into the 16,000s on Bitcoin, and we dropped down to the 1600s in gold, right? Now we're not at 23,000 or 2,300 in gold, like Bitcoin's at 23,000, but we are, we probably see some type of a pullback here. If we take our, remove these lines here, if we go ahead and put a Fibonacci on this, we're probably at some type of Fibonacci resistance, and we could probably see some profit taking on those gold bugs that hung on to gold and stayed with it long, and we're sitting just above the 61.8% Fibo. We're forming kind of an evening star pattern, right? Kind of a rounding top pattern, and so we could see a drop, pullback, maybe some type of a, maybe drop down to about the this is about 1793, about 1800 on gold. See a little bit of a pullback, some profit taking. Again, this is not bearishness. It's not long-term bearishness. We may hit that area and then take off and keep going in a zigzag, right? However, why be long here and give all this up when you can just take the money and run, flip and go short, or hedge, or wait for the pullback to re-enter the market, right? Use your oscillators to find out where this point is. But still, let's go ahead and bulls versus bears. I am short-term bearish on gold, but I am medium-term bullish, right? Okay, so we looked at the assets. We can look at one more longs are in the flow here. How about UK oil? UK oil, the Brent crude. Take a quick gander at oil. Ooh, that was kind of trendy there. We have remember the big run up to 138 and a pullback, and we pulled back to some support, but we got a little turning here, so maybe come back down to the 74.80 area. You know, we're hitting some, looks like some Fibonacci resistance here, and then so we can, the 23% retracement is acting as resistance, and maybe we come back and tag the 200, maybe in the 75 to 70 area to get down. Come on down, right? Especially oil and the dollar usually go in the opposite direction too. As the dollar gets stronger, it brings commodity prices down because commodities are priced in dollars. So a stronger dollar usually means a weaker price in crude, okay? So we can see that moving forward, okay? So bulls versus bears, I am bearish on crude as well, okay? All right, so that's going to be it for me. I know you guys probably want to, someone's talking about NASDAQ. We go to the Qs, NASDAQ 100, and we can see that, similar story here. We have commodities and all kinds of assets, risk on assets rallying from lows, running into resistance. We have a bearish Harami pattern that's forming on NAS 100. Bullish candle with a small body candle in the front, usually pretty bearish, right? People say, but that candle, the green one is bigger than the red one. No, that's not how that works in trading. If you have something like that, it's usually bearish, right? We can see a pullback, maybe back down to, we have the 207 moving average coming in about 11,617. So a little bit of a pullback. But we do have some higher highs and higher lows here, right? Might not come back down to this trend line, but we also have a downward trend line as well, and the price may be respecting that. We've got something like that going on. So we make, this play inside this triangle, either break south side or break north side, but this short term, we've got a bearish sign right there on the NASDAQ. Again, we're at right now we're at 12,044, right? So maybe a pullback down to 11,584 for the NAS 100. Okay, so that's going to be it for me. I want to thank you so much for joining me for Bulls versus Bears, the weekly Forex forecast from Elite Traders University and My Market Heat Map. The arrangement of currency pairs by percentage change, which tells you what's hopping, what's popping, what's dropping, and it's not. And then make sure that you sign up for the Las Vegas Mansion Mastermind that I'll be hosting April 3rd through the 5th. There's an early bird bonus of the profit webinar, the profit package, which includes the advanced trend line videos and the supply and demand zone videos as well. Yeah, that's the profit bundle that is going to be available to you. So make sure that you sign up. Profit bundle. Yeah, that's over here, right? Yeah. So this profit bundle includes advanced trendline course plus profiting from supply and demand zones, and those two video sets. In fact, the supply and demand zones were taught to me by a trader who managed $100 million when I worked for the brokerage. And so I talked with him for over 12 hours. I was able to distill that into these videos here that normally go for $1,497. We'll include that when you enroll or when you sign up for the Las Vegas Pip and Run Forex Mansion Mastermind. Okay, so again, my name is Greg McLeod, and I look forward to working with you. And you guys have a happy trading day, and I wish you much success. God bless you guys. I love you all. Thank you for liking and subscribing, and I look forward to helping you in your trading. All right, Greg McLeod signing out. Peace and pips. Bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!